Let's take a look now at the third category of products and services offered by the bureaus in India. This category, which I have called analytics, actually is an extremely important and a very valuable source of data information and ranges from marketing strategy all the way to categorizing your portfolio quality. So let's start with the first of these various products under this particular category. Strategy management tool. Basically, it's a decision scoring engine that enables your organization as a lender to identify the right targets, to increase customer loyalty, to boost sales and margins, manage risk, and implement business and regulatory policies and procedures. So, for example, if there's a regulatory requirement, you can customize the response so that the regulatory environment is taken care of. For example, again, an LTV, a loan to value ratio. You can put a limit in there and see whether any deterioration of your portfolio is resulting when you do a revised valuation to take the LTV above the regulatory limit. This tool also helps, as its name says so, strategy management. So, for example, you might use this tool to improve your operational efficiency. It will help you minimize losses and bad debts, ensures, as I said, compliance with regulatory policies. But equally important, it helps you decide what your future target group is. Which are your customers? Which are your best customers? How do you maintain and retain such customers? The next product is opportunity analytics. The opportunity analytics helps in identification of opportunities for consideration of credit policies of applications rejected by you but approved by others. Now, this is probably one of the best ways to hindsight your own credit policy. You've rejected 100 files. 6 months later, if you run a report on these 100 files and see that other lenders have lent to this particular entity or individual whom you rejected, and more importantly, that borrower now is paying on time, maybe it's time for you to look at whether your credit policies need to be loosened a little. Alternatively, if you find that nobody is given a loan to these 100 rejects, it's a validation of your credit policy. Therefore, I think this is a product, this is an offering which all of you must use. Run your reject cases which you think are over and done with through the bureaus every 6 months, every 1 year, and evaluate whether your credit policies were right, too liberal, or too conservative. Opportunity is that if you rewrite these policies, your business will grow and your profitability will also increase. The next product is what is called survey analytics. The bureaus will do a survey on your existing borrowers through various social media and other channels to target customer campaigns, reduce human intervention, reduce costs, and also help you decide on a market entry or exit strategy, either geographically or on a product that you might be introducing in the near future. The next product under analytics is what I call collection management and analytics. Often ignored in the initial stage in the desire to increase business. One of the most important legs of the lending process is collection. And therefore, this product looks at data and analyzes the same to prioritize how your collection will behave. So, for example, there will be what is called an early warning signal. That early warning signal will, based on parameters that you have set, decide and warn you about potential cases that might not pay on time. This could be based on a drop in the score, it could be based upon check bounces, it could be based upon delayed payments on due date. And what will happen is you will prioritize which and how you need to touch which customer based upon this analytics. So, for example, a first time delayed payment, you might be soft and write a small letter. But other cases where there has been frequent delinquencies, the score has dropped dramatically, you obviously need to be more alert and more aware, and therefore action, activity, and appropriate responses from your side well in time before the loan deteriorates further and becomes an NPA. Needless to say, not only will your write-offs reduce, but your Operating overheads will reduce because you will now optimize your manpower bandwidth to focus on the real calcified and hard cases as against the ones that are initially still defaulting or delaying payment right at the beginning of their loan, the ones who are initially not paying on time but have not yet become regular and serial delinquent payers. Some of the bureaus offer another product called income analytics. Based on the EMI serviceability, the borrower's income is estimated. Needless to say, the benefit of that is you will be able to market your products as a lender and estimate the repayment capacity of a borrower. And increasingly, some of the lenders are now using this tool to take a significant component of the manual credit decisioning process away from the entire chain. Retaining your best borrowers is something that's extremely valuable and important. Don't forget, the history shows that it takes 10 rupees to acquire a new customer, whereas to retain a customer, it will take only 10% of that. Therefore, feedback analytics, the next product from the bureaus, actually builds response models that assists you, the lender, to retain your best borrowers. The benefit, you don't need to go looking for new borrowers by losing the old ones. You don't need to worry about holding on to the existing borrowers who are paying on time. And of course, look out for cross-selling opportunities to this batch of customers who have been your gold customers. Again, therefore, improving your growth, improving your profitability, and making your customer happy so that he stays with you, the lender, for a longer and a more varied time period. Customer management service is what some of the bureaus do offer. It's a secured and cost-efficient product that helps you optimize using available data to provide not only accurate collection decisions but also allows you to manage customer experience. What is the customer feeling about your organization's service levels? This data analytics is good for retaining borrowers, improving your cash flows, growing your business, and reducing your NPAs. Customer satisfaction is an extremely important component of the lending cycle. So the customer satisfaction score that bureaus offer you now enables you to identify areas where there is a need for improvement. This helps the lender to identify the satisfaction level of the borrowers and the response that the borrower has to new products and existing products that you are offering, and therefore it is an opportunity to reduce borrower attrition. It helps you hold on to your customers because you now have a quantification of how satisfied or dissatisfied the particular customer is. Customer profitability ultimately is also important for you. So customer profitability analytics actually through the bureaus helps you understand the profitability that you have on a particular loan account. Are you making money? You've given the loan, but are you profitable? Is the customer paying on time? Is he balance transferring out from the lending institution like yours and going somewhere else, thus reducing the time period over which you earn money on the particular loan? And therefore, this will help you identify profitable borrowers and improve not only your profitability but also customer retention and customer loyalty. Another important product that the bureaus offer is credit risk assessment. This is increasingly becoming an important tool which the bureaus offer and the lenders are using. What the tool does is it helps you identify and accurately assess the risk, if any, in the portfolio and to identify high-risk borrowers. The benefit of that is it helps you formulate a plan of action to assess fraudulent transactions and therefore ensure that your losses, your write-offs and your NPAs are significantly under control. The last product under analytics is loss forecasting. Based upon market trends, the tool will actually enable you to assess the risk of fraud in your portfolio. This could be through various means and basically enables you as a lender to identify frauds and make changes in your credit policy well in time as against waiting for frauds to happen and then reacting. It's a proactive tool that will actually help you, again, identify high-risk borrowers, take a credit decision accordingly, and reduce your NPAs and therefore improve your profitability.